You ever see a company's headline numbers and they look amazing, but you kind of feel like there's more to the story? Well, that's exactly what we're digging into today. We're looking at XMH Holdings, a company that just posted some really eye-popping results. But as we're about to see, the real story isn't just in the headlines. We're going to be looking at their latest financial report, specifically the results for the first half of fiscal year 2026. And we're going to peel back the layers here. What does it really mean when you have record growth, but profits are actually shrinking? And what do big cash movements tell us about how healthy a company truly is? All right, so here's how we're going to break this down. First, we'll hit that big question, growth versus profitability. Then we'll look at the three business engines driving everything. After that, a quick financial health check. And finally, we'll see what's on the horizon for them. Let's get into it. Okay, let's dive right in. First up, growth versus profitability. So what's the big story here? Well, the headline number that's grabbing all the attention, it's all about growth. And I mean massive growth. Get this, XMH's revenue surged by an incredible 40.5%. We're talking in just the first half of the year. They jumped from about 67 million Singapore dollars all the way up to 94 million. That is just wow. It's like they built a whole new business in just 6 months. A seriously impressive number. But, and this is where the story gets really interesting, there's a twist. Even though revenue shot through the roof, their gross profit margin actually went down. It dropped from 36.3% to 32.9%. So, they're selling way more, but they're keeping a little bit less profit from every single dollar they make. So that raises the big question, right? Why would profitability shrink when sales are absolutely booming? It feels counterintuitive. You're selling more stuff, you should be making more money on it, right? What's going on? Well, the report gives us a couple of clues. It looks like the cost of making those sales grew even faster than the sales themselves. They point to two things: higher costs to make sure deliveries were on time and bigger discounts for customers. So basically, to get that amazing growth, they had to spend more and maybe cut their prices a bit. You could say that growth came at a cost. Okay, so that explains why the margins got squeezed. But what about the how? Where did all that incredible growth actually come from? Let's pop the hood and take a look at the company's three main business engines. So this chart shows us how it all breaks down. You can see distribution is the biggest piece of the pie. That's over half their business. Then you've got the project segment, which is a pretty big chunk too, at almost 38%. And then after sales makes up the rest. Okay, the absolute hero of this growth story, it's the project segment. I mean, look at this. Revenue exploded by 84.1%. That is just staggering. It looks like they wrapped up some major projects, and that really juiced the numbers. And it wasn't just one segment. The distribution segment, their biggest business, remember, grew by a really solid 25.4%. And this was across the board in all their markets. That tells you the core of the company is super strong. And hey, let's not forget the after-sales team. They also posted a nice 9.1% increase. The report says this is because they're being really proactive with customer follow-ups. That's always great to see. It means they're building those long-term relationships. All right, so we've got this picture of amazing growth, but also some pressure on profits. Now it's time for a financial health check. Let's ask the so what question. Is the foundation of this company actually strong? And to do that, we need to look at something that's kind of like a car's fuel gauge. I'm talking about the cash flow statement. It shows you if there's enough actual cash in the tank to keep the engine running, which is, absolutely critical. And boom, we hit another puzzle. Profits were up 23%. That's great. But the company's cash reserves actually went down by $6.3 million. So wait a minute. How does that happen? If profits are up, shouldn't cash be up too? Where did the money go? This table lays it all out for us. You can see they generated a ton of cash from their operations, over 13 million. They also brought in about 12 million from investing. But then look at that last number for financing, a massive outflow of almost $30 million. And there's our answer. So where did that nearly $30 million go? Well, they were making some smart moves. They used about 13 million to pay down their revolving credit. Think of it like a company credit card. They paid back another 6 million or so in trade bills, and they paid out almost $9 million in dividends to their shareholders. So this wasn't cash just disappearing. It was being used to strengthen the balance sheet and reward investors. Pretty strategic. Okay, so that gives us a really solid picture of the company's health. Now for our last section, navigating the road ahead. What's next for XMH? Well, the company sounds pretty optimistic. They talk about having a healthy order book. That's basically just corporate speak for we have a lot of work already lined up. So that gives them good visibility into the near future, which is exactly what you want to hear. But, they're also being realistic. They're quick to point out some potential risks on the horizon. We're talking about things like geopolitical tensions, inflationary pressures, and of course, the big one everyone's dealing with, supply chain disruptions. So, when you put it all together, the big takeaway is this. The company is doing really well, but they're focusing on controlling costs and being more efficient. They've got this incredible growth engine, but now the name of the game is protecting those profit margins. And that really leaves us with one final thought to chew on. For a company that has such a powerful engine and strong demand, are the biggest threats now coming from the outside? It seems like they have their own house in order. The real question is how they'll navigate all those external headwinds. It's definitely one to watch.